Hello and welcome to the Technical Day Trader. Today we're going to look at a day trade I executed on February 7th. That's today on the SPY, which is the Spider ETF, which tracks the S&P 500. And basically what we're going to start doing is we're going to apply pivot points, which is a leading indicator taken from the prior day's high, low, and the close. Then I'm going to show you another day trading tool I use, technical indicator I use, and it's a modified version of the moving average convergence divergence, or the MACD. And what we're basically going to do is we're going to use pivot points to build our risk profile before even entering the position, or a risk reward profile. And then I'll wrap it up basically by showing you how to place the buy order, place a limit order to buy, and at the same time put in a stop limit. Alright, so first things first, let's apply pivot points. So what I'm going to do is go into studies, and I'm going to go into support and resistance studies, and there it is right there, pivot points. So I press it. Now, this morning, before the market opened, these lines were, if I applied pivot points before the market opened, they would have been able to be calculated, because what they do is they take the high. Let me just bring up, here we go. And what they do is they take the high, which I've marked over here, the low, which was at the beginning of the trading day yesterday, and the close, which I marked in this little yellow line. And what it can do is it creates these pretty highly respected support and resistance levels. And there's a pivot point, which is also known as the typical price, and that's the high, the low, and the close divided by 3. That's known as the typical price. So that's where you start. And creating the support level 1 is the pivot point times 2 minus the high of yesterday. And support 2 is the pivot point minus the high minus the low of yesterday. Now it's kind of the inverse for resistance levels, which you see up here with the red line. Resistance 1 is going to be P times 2 minus the low, and though you can't see it, it is up here. Resistance 2 would be P plus high minus the low of yesterday. And what I do to modify the moving average convergence divergence, which I'll try to make a little easier to see right here, is I go in and I apply the MACD. You go to studies, momentum studies, I believe, and the moving average convergence divergence is right there, and it usually comes out with a default of 12, 26, and 9. And what I'm going to do is I'm going to click on it, go to edit MACD, and instead of having 12, 26, and 9, I multiply everything by 4. So this is going to be 48. This is going to be 26 times 4 is 104. So I put those in these fields right here and press OK. And this is basically what you get down here. Now what it does is take a lot of the noise out, even in day trades. I use this when looking at the macro market as well, but it works in day trades just as well. And what it does is it smooths out a lot of the noise that the default MACD can throw off during the trading day. Okay, so since I'm day trading, I'm not going to touch anything until 10:30 in the morning. And by the time 10:30 hits, right at this point, it's halfway between support 1 and support 2. So I'm hoping that it'll sell off to support 2. And what I can do at that point is start to begin to build a risk profile for myself. So if I know the exact number, and in this case I do, 149.92 is where I want to enter. And at 10:30, what I can do is look at 149.92, and I can look at support 1. So that's 150.51. Now it's a difference of 58 cents, almost 60 cents. So what I'm going to do is I'm going to put a buy order in at 149.92 for, you can either do, I use option contracts, but the same way for buying a stock. I'm just going to use the actual numbers because we're not buying contracts, which are priced differently. We're just buying the stock. And I'm going to put a limit order in for $10 below that, a stop limit order $10 below that. So on however many shares that I want to buy, in this case it was 1,000, I'm willing to lose $100 to gain $600. And basically that's what day trading is. I'm going to take all this information that's provided for me, and I'm going to take a educated guess with a high probability of more return than I would if it doesn't go my way, which it's immediately stopped out. So at 10:30, I'm looking at it. I'm saying, okay, if it gets this bounce off support 2, I'm going to look for a double bottom, and wouldn't you know it, it does form a double bottom. So this is once it's bounced off once, I want to look for that double bottom. And what I'm going to do is I'm going to go into trade, and this is in Thinkorswim. Now these are option contracts, but what I'm going to do is just press on the ask price, and this is buying stock. Let's put in 1,000 shares. Shoot, and I already messed up. Okay, what I'm going to do is go into the ask, buy custom with a stop limit. So what I'm doing right now is I'm saying I want to buy 1,000 shares of the SPY ETF, and I'm going to put in 149.92. And what's great about this is the second that this order is filled, I immediately have my stop place, my stop limit. So what I'm going to do is say I want to sell minus 1,000, ooh, not 10,000, holy crap, 1,000 shares of the SPY ETF at 149.82. So that's a $10 difference, or I'm sorry, I'm thinking of options. It's a 10-cent difference. 149.82. So what happens is when 149.82 is reached, my stop limit order up here for 149.82 is activated. So if that price is hit, it'll stop me out just like that. And you know, you would press confirm to send, and what it does is it's going to put that buy order limit right on that line, 149.92. And I mean, according to Hoyle today, it was a beautiful thing. When it came down here, it bounced off. I'm just going to zoom in here real quick. It bounced off again on increasing volume, which is always a good thing. Also, there was a decent amount of buying, an increased amount of buying volume on the first bounce. The second bounce is the same story. And it got me in at 149.92 with my projected target of 150.51, and my stop limit was never touched. Now you can see if I zoom in real quick that, and this is kind of hard to see, that it actually went down below my support level of 149.92 to 149.85. Well, this is because specialists on the exchange usually like to take out volume at these very high levels and shake out people with very close stops, which is why I use a little bit of a wider stop. But in day trading, you can afford to do that because you're looking for that previously defined move of 58 cents to the upside. So I'm willing to take a 10-cent hit if I can get a 58 cent to the upside. And in this case, what I did was I put a limit order in when this was activated. I put a sell order for 500 shares at 150.51. And then I put another right up here at the pivot point at 150.93, meaning that I wanted to leg out half my position at this support level 1 and the other half at the pivot point for the day. And that's pretty much it. If you guys have any questions, we do have articles involving pivot points as well as chart patterns. This double bottom would be a chart pattern that you look for, and that's pretty much it. I hope you guys enjoyed it, and we'll see you soon.